Expectations of more quantitative easing from the Fed and other central banks has seen the price of gold hit new record highs. The strength in gold carrying other metals like palladium standout gainer on hopes of a recovery in demand from the Chinese auto industry. Let's talk a little bit more about the kind of rally that we've seen in gold and silver and copper, palladium. Joining us now is James Turk. He's the chairman and founder of Gold Money, which buys and stores precious metals for investors. James, thanks very much for joining us. David, of course, staying on the panel as our guest host. The question seems to always be, is this move that we've seen in gold in the recent past more to do with dollar weakness, or is there a fundamental gold story that we're not listening to?
Yeah, there's a fundamental gold story. You know, at any given time, it can be dollar weakness or dollar strength, and gold can still go up. And in fact, this decade, gold has risen at double-digit rates of appreciation on average every year against all of the world's major currencies. So we're in a bull market. It's got good fundamentals, and I think this is going to continue for the foreseeable future.
Can I ask, who's actually buying the gold now? Is it still people looking for, if you like, fundamental value because of uncertainty, or is it being pushed more by more speculative means? Because the momentum is going one way, isn't it? It's,
yeah. You know, it's interesting. There are two types of buyers in the gold market. You have the accumulators, those who understand that gold is good value. They buy the dips. And then you have the trend followers. They tend to buy the strength. And what we've seen since August, it's really been the trend followers more than the accumulators. But the interesting thing, we've seen something on this move up in the gold price that we hadn't seen basically all decade long. The accumulators are following very, very closely. You know, in the past, they would wait for gold to drop 50 bucks before it came in. This time, they're letting it drop, you know, 5, 10 bucks. Every dip has been well bought. So there's something special happening this time that we haven't seen all decade long. And I think that's one reason why we've seen so much power in the gold market over the past couple of years. Because at the end of the day, it's the physical buyers that really drive the gold price. You know, there's a lot of paper gold out there, which are representations of gold. But when you own paper gold, you only own exposure to the gold price. And at the end of the day, it's the physical buyers that really are driving the market, and that's what we're seeing today.
The physical buyers took the price of gold to about 1,100. That seemed logical. 1,150, 1,200 even seemed logical. What, producing an ounce of gold is what, $1,000 per ounce, as I understand it. Correct me if I'm wrong. But when it comes down to levels at $1,395, these are paper buyers at the end of the day. If they decide that they found another safe haven, which is not gold, or the economy turns around, or QE2 comes into play, do we see gold drop back down to the 1,200 level?
I don't think so. And I've been saying all along that a 3-digit gold price is history, just like a 2-digit gold price is history. You know, there's so much currency debasement going on, and there's so much concern about the banking system, sovereign debt. You know, people are really looking for a safe haven. In the 1970s, there were no safe, you could go to the Deutschmark or you could go to the Swiss franc as safe haven currencies, but there are no safe haven currencies today. In an environment where you can't earn any interest, why hold a currency and take the risk when you can own gold or silver, a tangible asset, and avoid that risk?
Is it that tangible an asset? Because at the end of the day, silver jumping to, what, 30-year highs, it's never jumped in the recent past anyway to the same levels as gold has. I mean, why are the people who are looking for a safe haven going to silver when they can get into gold?
Well, silver is a cheap form of gold. Remember back at the end of the last bull market in 1980, gold was $850 and silver was $50. Today, gold is, you know, $13.50. It's well over that $850 high, but silver's $23. It's less than 50% of what it reached in 1980. So if you want a tangible asset, you know, to protect yourself, you can buy gold or you can buy silver. The problem with silver, though, is there's a lot more volatility to it, because silver is both a monetary asset as well as a commodity that's used in industrial applications. So the demand for silver is very elastic in economic terms and very sensitive to changes in price. So if you can't handle the volatility, stay out of silver. But generally, I recommend, if you can handle the volatility, 2/3 of your precious metal portfolio in physical gold bullion and 1/3 in physical silver bullion is a good mix.
Because the obvious question is, you know, where are these going? You know, and what will it finally take to burst the bubble? Will it be 2 trillion of QE?
Well, you know, where is the bubble? Is it gold or is it national currencies? I tend to think it's more national currencies, because on a relative basis, gold is still very undervalued by historical standards. Back in 2003, I said that gold was going to be $8,000 an ounce in 2013 or 2015, which at the time sounded outrageous. But the logic was that if gold can go from $35 to $800 in the 70s, which it did, and it took $350 to purchase in 2003 what $35 purchased in 1971 on an inflation-adjusted basis. It took $10 versus $1 over that 30-year period of time. Why can't, on an inflation-adjusted basis, gold go from $350 to $8,000? It's basically did that in the 1970s. Why can't history repeat? When you go into periods of monetary crisis, after the illusions of prosperity from the boom, you get the bust. And during the bust, people look for safety rather than generating returns. And one of the best safe haven assets to own during a period of a bust is gold. So I think gold's going much, much higher. There is no bubble. Also, people say, well, it's come so far. But if you had said when the Dow was 1,300 in 1984 that it was expensive after breaking above 1,000, you missed the next 3 years where the price of the Dow Jones Industrials nearly tripled. I think you got a trouble yet in the gold price in the next 3 to 5 years. It's not going to be a straight line, but it's going much, much higher.
Yeah, I think Jim Rogers agrees with you. I think he blatantly said he thinks gold is going up, and that's a story no one can change. Thanks very much for coming in, James. James Turk, of course, chairman and founder of